We're going to talk about buy side and sell side liquidity. This is not really that complex to go over here. Well, in the last section, we talked about qualified swing highs and qualified swing lows. All I'm going to add upon that specific concept is that when you identify a qualified swing high and a qualified swing low, I want you to imagine, okay, this red candle right here could have been a little bit more high here, which is completely fine. But you guys get it. When you have a qualified swing high and a qualified swing low, for example, right? So right here we have a qualified swing low, and right here we have a qualified swing high. Sorry for the bad drawing right here. Right, with this two candle here, because we have the red candle essentially overtaken by this previous one, by this next one right here. And then we have a qualified correction here, as well as we have a qualified correction here. The top of this qualified swing high, the top of it reside buy side liquidity. And then the bottom of the qualified swing low, what we have here, reside sell side liquidity. The top of this candle right here, we have buy side liquidity residing there, buy side liquidity. And then the bottom of this qualified swing low, we have SSL, sell side liquidity residing below here. That's how I want you guys to see liquidity, right? So on the 1 minute, we're not gonna always utilize this heavily, but it's important for you guys to see this and understand what's going on, right? Because if you don't understand where to find liquidity, it's mainly because you have not properly identified what is a qualified swing low and a qualified swing high in your structure, right? So once you have that, that's where you guys are going to be looking to see where there's liquidity sitting in your price action. So now I want you just to know this for now because this is going to be important in the next section. Okay. If you identify a qualified swing high and a qualified swing low, that's where liquidity reside in price. That's going to be the fund. That's part of the foundational and just building upon what we talked about in the previous section, which is qualified swing high and qualified swing low. So with that said, we can move on to the next section. So this is just buy side, sell side liquidity, and the sell side and buy side liquidity can be found above buy side, above the qualified swing high, and below the qualified swing low for sell side liquidity. So next up, we're going to discuss about order blocks. Okay, bearish order block versus bullish order block. So let's say if you have a qualified swing high, right here, the bearish order block is always going to be found attached to a qualified swing high, right? Because this then and the bearish order block going to be the last bullish candle before the expansion to the sell side, which is attached to a qualified swing high. So when price essentially confirm the qualified swing high and start expanding here to the sell side, now you have a bearish order block right here that's left, right? But the only time you have that bearish order block is when we have a qualified swing high. If you don't have a qualified swing high, you don't have a bearish order block. Okay? If you don't have a qualified swing high, you do not have a bearish order block. Same thing for qualified swing low. A qualified swing low, the last bearish candle attached to a qualified swing low is going to be your bullish order block. Okay? This red candle right here, that's going to be your bullish order block. Simple enough, right? So you guys should have gotten used to identify qualified swing high and qualified swing low. So this should be much easier to understand if you already gone through the steps of trying to mark up, continuously mark up, your qualified swing highs and qualified swing lows. All it is just the opposite candle. So a bearish order block is always going to be a bullish candle. And then the bullish order block is always going to be a bearish candle, right? Now, the reason why this actually is bearish is because this serve as a supply zone or a resistance level. Think of it like that. Because when price leave this high, this zone high is this utilized in price action most of the time. Is that if price come back in here, the belief is that price should be rejecting this and allowing price to continuously move lower. And then for this one, if price continuously expand and come back and retest this zone, price should allow price to continuously move higher for higher price, right? So this essentially serves as a support zone or demand zone, depending if you trade supply and demand or support and resistance. This should act as a support level or a demand zone. And right here, this should serve as a supply zone or resistance level, essentially, right? So this right here, you can look at it as supply or you can look at it as resistance, essentially, okay? Right here, you can look at this as a support zone. That's one of them. Or you can look at it as demand. Yeah, don't bomb my writing. It's going to look at it as demand. That's all it is. The last bullish candle before bearish expansion here attached to a qualified swing high is going to be your bearish order block. And then the last bearish candle attached to a qualified swing low before bullish expansion right here will be your bullish order block. Bullish order block as support or demand zone as an example of those. And then your bearish order block are example of supply or resistance levels, right? So used for selling pressure zone, used for selling zone, and this one is used for buying zones. Perfect. And we're going to go over the chart and we're going to talk about a few examples, but this illustration should already give you guys an idea of what extension to expect because they're pretty clear and straightforward. Next up, we're going to talk about breakers. So what are breakers? The high probability breakers, okay? You may have seen breakers being described in different ways, but the reason why I have everything, like I say, everything that we have talked about, everything that we talked about so far going to be a building foundation, going to be building upon the foundation of the last concept that we discussed with qualified swing high and qualified swing lows. So in this example here, or in this illustration here, as you guys can see, the breaker, all the breaker are is a bit more of a complex version of the order block, but let's go ahead and describe the mechanics around that. So if you want to identify a bearish order block, right? Originally, a bearish order block was a bullish order block, okay? Originally, this was a bullish order block, right? Originally, when price came down here, right? This originally, when we expanded, was originally a bullish order block, right? Meaning that it was a zone that was going to be used for buying pressure, buying levels, right? To essentially extend. However, this fell automatically and turned into what? A breaker. Now, something needs to happen first before this becomes a breaker, right? The thing that we need to see first is that we need to have a swing high. You need to identify what is the swing high that created this bullish order block. The swing high that created this bullish order block need to be taken out first, right? Before we have this turn into a breaker block. If you don't have this get taken out first, then you do not have a breaker. I hope that makes sense. So first, you need a qualified swing low, right? For your bearish breaker, right? And then it comes from an order block, obviously, as well. And then you need an order block, right? Qualified swing low plus an order block. And then you need a qualified swing high. You need to identify, just identify it. You don't need it, but you just need to identify what was the qualified swing high that created this, right? And then you need that qualified swing high to get taken out, right? By this push here. We call this push right here the leg of manipulation, guys. This push right here is called the leg of manipulation. So this right here represents the leg of manipulation. So once you identify what is the swing high that taken out this, I'm sorry, that the swing high that created this, I'm sorry, you need to make sure the leg of manipulation, right, before we break this order block, get taken out. Once you have this sequence, then you have a qualified bearish breaker. Same thing for a bullish breaker. All with the bullish breaker is at first is a bearish order block, right? Right here. Originally, it's a bearish OB order block, right? And then this is the last qualified swing, the last swing low. Let's say this is the last swing low that we had here for price before we essentially reverse back to break it. The liquidity below here was taken out. As long as this swing high, this qualified swing low get taken out, before we break this and turn this into a breaker, then we have a valid bullish breaker right here. So our leg of manipulation is actually this one right here. We're going to go over a few examples. Don't worry, we're going to go over a few examples in the chart. I want to make sure I should give you guys an illustration here. We spend some time illustrating an example and then give you guys some clear example of what this is supposed to look like. So it's going to have a few steps. So you're going to have, first, you need an order block, right? to be there, present, which is this one, originally. Next, you need to identify if it's going to be, obviously, if it's going to be a bearish breaker, right? This is going to be for a bearish breaker. You're going to need a bullish order block first, right? For a bearish breaker, you're going to need a bullish order block. After you have the bullish order block, you need to identify, okay, what is a swing high that created this order block, right? You need to identify this. That's the next step, which is this one right here. We need this to be swept by a leg of manipulation. You want to call it ML, manipulation leg, right? We need that to be swept. When is that swept? Now we needed to return back to essentially invalidate that order block with the body, and validate it with body, not with a wick, not with a tiptoe. You literally need to see body close below, right? Below the order block. So it can turn into a breaker. We're going to call it BRK. And the reason why we call it a breaker is because now this order block goes from being bullish to bearish, and then now can act as a resistance. Instead of now being a buying level, this can now become a selling level, right? A resistance, support turning into resistance, or demand zone turning into supply zone, if that makes sense. So this is kind of like the sequence. So you need, that's why the qualify swing high exercise is so crucial, because if you don't understand qualify swing high, you're going to struggle mastering this next concept, right? Because every time you have an order block, you need to make sure that we have another swing, an opposite swing attached to that, right? Because when you're reading instruction of 1 minute, it's always going to be qualify swing high, qualify swing low, qualify swing high, qualify swing low, qualify swing high, qualify swing low, qualify. So it's always going to be like this. So when price is getting ready to move lower, let's say if you're going to move lower, let's say we were, I'm gonna erase all of these. Let's say we were bearish originally. I'm sorry, not bearish. Let me clear the drawing, clear all the drawing right here. Let's say we were bullish at first, right? Like bullish, and we'll come from down here. We're only gonna get a clean reversal, right? You're looking for a specific type of sequence to confirm that this is a clean reversal. Where typically when you have this type of breakup forming, this is a very, very strong reversal pattern. Okay, how, like let's say for example this does not get taken out. Let's say price only come up here, something like that, and then reverse and break here. This can still be a breaker in other traders' book. However, it's not going to be a high probability. So you need this to get taken out first right here before we reverse. Once you have that, that's it. Now you're good. Now you're good to go. So unless you get that price to take out that level, you're not going to have a very high quality reversal, right? Because remember, we trade reversal. That's one of the pattern, that was one of the type of trade that I'll show you guys in the later section that we take: reversal and continuation. So for reversal trade, it needs to be a very high probability type of scenario for you guys to engage in the market. Because if that scenario is not high probability, you do not want to engage. Same thing here. For a bullish breaker, you need a bearish order block at first. You need a bearish order block right here at first. Sorry for my writing, guys. So first, you need a bearish OB, okay? You need to identify what is a swing low, the qualified swing low attached to it, and that swing low need to be swept. We're gonna just put swept, all right? It needs to be swept completely by the leg of manipulation, or manipulation leg right here. So this qualified swing low need to be swept, because the order block is going to be attached to the qualified swing high automatically, right? Because that's the way we find a bearish order block. So the qualified swing low need to be swept completely by the manipulation leg, which is essentially this one right here. Once that's swept, next thing that you want to see is price now invalidating the bearish order block. right? You need that to be invalidating the bearish order block. Okay. Once that bearish order block is invalidated, that's it. You're good to go. Now, this has turned it into resistance, turning into now support for price to go higher. So that means that price maybe was coming down right here, guys. And then you had this swing low left here, price expanded, rejected off here, created a resistance level by coming down here and creating a qualified swing high, swept this, did not show willingness to continue below this level, and essentially reversed, boom, and broke above here, giving us a bullish breaker. Now this zone can become a qualified support level or demands on why, because we had this swept here before we reversed. So we have grabbed what liquidity. Remember, I told you below every swing low and swing high, we have liquidity. So essentially what you want to see is a liquidity, a sell side liquidity being taken out before price essentially confirm the order block. So that's probably like the simplest way of us simplifying everything that I just say. So you for bullish breaker, for bull breaker right here, you need first bearish order block, right? Plus sell side sweep plus invalidation. You need the sequence of the order block, right? Bearish. If you have this sequence right here, perfect. That is all right here.